Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, talking with his good friend, Matt, the lumberjack landlord. How you doing, buddy?
I'm doing awesome. Excited to cover this in topic number 2.
Yeah, so I don't know if you watched my conversation with Matt, the mortgage guy, who comes with me, I think Wednesdays at 10 a.m. Pacific.
Yep.
But we have been talking about the mortgage market crashing. We both called refi is going to fall 75%. As of last week, they were down 71. We've also talked about purchase mortgages collapsing and people being pre-qualified, not qualified. So we have been talking about the mortgage market crashing for quite a while now, folks.
Yeah.
Matt, the mortgage guy, has a playlist. Check below. But I wanted to talk to you. You and I buy houses. We usually get mortgages. Talk about what you and I see. Because again, I don't think there's any question. The mortgage market is going to crash, right? You did $4.6 trillion in origination last year.
Yeah.
You might be lucky to do 3.5 this year. That is a crash. So
yeah,
let's talk about whys and hows and what's going to happen.
Refi market's dead.
Yeah. Yeah.
The refi market's dead. I mean, you have 76% of the market, right, with a 3 in front of their mortgage.
Yeah, I think it's even more. Yeah, I think it's the high 70s, but yeah, it's something like that. Yeah.
It's like 78% or something has a 3 in front of it. Well, guess what? Now you have to worry about the mortgages that have a 4 in front of it.
Exactly.
How much more is that? I don't know what the numbers are yet, but would you be shocked to know it might be 10 or 12% to get us to 90?
So Black Knight probably puts out the best housing stats lately. Black Knight is not the knight, but knight like the armored guy.
K-N-I-G-H-T.
Yeah, K. There you
Chess.
go. Yeah. Chess, that guy. Anyways, check them out. Black Knight puts out amazing stuff. They put out an article. I read it. It's probably a month old, but they said only 5% of all mortgages, would be up for refinance, would make sense to refi.
When the rates
today's rate.
Oh, yeah, today, right now.
At today's rate. Yeah. So so today, I think we're 5.25 on the 30-year. This was done when it was 5. And this is how they define it was basically a make sense loan. Basically, they said the only loans they wanted to say who should refi. And basically, if the 30-year cash out refi or rate term refi is 5.25, you had to be 5.75 or above.
Right.
And they said at that point, it meant only 5% of all residential mortgages in existence qualified to be mathematically viable.
I have one mortgage at 6.5%. And it is 32,000 away from being paid off.
Yeah, just pay it off, right? Just chunk. Yeah.
That's it. And that's what we're doing. We're chunking it out. So it makes no sense to refi because it's also at a dollar amount that they're going to charge you this massive premium.
Yeah, exactly.
It makes no sense to refi. Yeah. I don't want to cash out because I'm going to sell the house probably anyway because it's my last single family or next to last single family. But that's exactly right. And this is one of the things you and I've been talking about since January, which was when the slowdown comes, you better have a side hustle if you're a mortgage broker or a real estate broker. And we are seeing it in spades right now for the real estate, for the mortgage brokers, because who wants to be selling something in a market where only 5% of people even qualify? Yeah. No one would say, I want to go after 5% of the market where that's the max that qualify. Because largely speaking, if they didn't refi when it was 2.5 or 3.5, or even 4.5.
Yeah, there are other reasons.
There was a reason.
Yeah.
It's because there was a reason.
Yeah.
That's why they didn't refi then. So that 5% is probably the dirty, the gross, the guys like me who have something that they were paying a mortgage down for 15 years.
They're almost done. Yeah.
Oh, exactly. Doesn't make any sense. So they are doing the right thing by evaluating that.
Yeah.
But that's where I said, with like better.com, every single time I heard one of their, ads, I was just like, I was playing a Karen Carpenter song. We've only just begun.
Yeah. It's not good. Yeah.
They're going to go down like you read about. And then all these others, like think about all of the big banks that drastically expanded their lending operations during the boom in the last 2 or 3 years to the point where they were literally creating their own courses and classes.
Yes.
To get people spun up so they could actually be able to have the conversation so they could do this with people. And now those people aren't going to have a job.
Yeah.
And those are decent paying jobs too.
Yeah. No, it's, I actually said on the daily financial news, if you're in the real estate, if you're a real estate agent or a mortgage broker, it might feel like a depression. Your industry
Mhm.
It's
Yep.
very much a depression, right?
Yep.
I think the economy has a recession, but there'll be little industries. Yeah, it's gonna hurt. It's gonna hurt.
I
But
talked to a I talked
go
to a
ahead.
broker out of state that did 23 deals. So they're not in New Hampshire, but they did 23 deals last year.
Mhm.
They've done 2 so far this year.
Ouch.
Little bit of a revenue adjustment.
Yeah. Well, you got to get your cost right, right? You got to get your cost structure right. That's why layoffs are coming.
Suffice to say, his cost structure is not right.
Yeah, no shit. Yeah. And then again, I actually called it. I love when I peek around the corner and make a call. I called before the 5 big banks reported that one of them is going to talk about mortgages and happened to be Wells Fargo. 33% adjustment. The other 4 are coming.
Yeah. Oh, yeah.
Wells Fargo was just first, like Bank of America coming, Chase coming.
Wells is always first.
Yeah.
When it's bad news.
Layup.
Yeah. Yeah. It's all well. And the funny thing too is like when we talked about it back, I think it was probably 6 or 7, I was probably 7 months ago now. I think it was October, November timeframe where everybody was concerned because they did away with HELOCs. And they're like, this is the beginning of the end. It wasn't the beginning of any end at all whatsoever. It was all about debt
preparing. Yeah.
It was all debt utilization, what you're allowed to lend out. And they actually then moved all that available capital
to more loans. Yeah.
Right. But now we've got an actual real problem, which is 5% of people have a loan that's worth refinancing today. That's not any good. And there's no flexibility. I'm wondering if they ever do something on refis where they do like an adjustable rate mortgage for 2, 3, or 5 years just to help people lower the payment. Like if that's going to be a program that any bank comes up
they're
with.
going to have to get creative. And the answer, unfortunately, is going to be ARMs, which I hate.
These banks are going to have to show massive earnings. They're going to do massive layoffs on anybody that's doing anything with lending. So that's definitely coming. The second thing that's likely to come or almost guaranteed to come is going to be creative products. And we know that 3 to 5 years after a creative product hits the market, it creates a ton of opportunity for investors.
Yeah. Yeah.
Because they're never creative in a good way.
Yeah. So let's talk about the elephant in the room. We both agree that mortgage crash is coming.
Yeah. Mm-hmm.
Obviously, I mean, it's obvious to everyone who knows that if a mortgage crash is coming, you have to have a real estate crash, right? I mean, they like go hand in hand. It just has to happen. Prices have to crash, right?
No. It's still, and the crazy funny thing is I didn't get out of the 9th grade. So I didn't study supply and demand or economics on any level in high school. This is purely life lesson. If I have something that you need, you're going to pay me for it. And if I have something that you and 3 other guys need, you're going to pay me more for it. It's very simple. It's supply and demand. And so what these idiots don't understand is that the biggest determining factor, not soul, but the biggest determining factor is supply. Then it's demand. And again, this is why wage increases matter. This is why more money in the market matters, is because that will help trump the cost of that mortgage. But I'm watching a lot of markets and some stuff sitting, but it's the stuff that's super high in the clouds, or there isn't a bunch of stuff. Turnkey stuff is still selling.
Yeah.
Turnkey's still selling.
Yeah. So I unfortunately did go to college and get a master's degree, and I did study supply and demand, and my undergrad is in economics. So unfortunately, I had not only have life events, but I have this. There's a couple of things that people need to realize. Certainly, there is a lending market. It is certainly changing. It is certainly a lot less affordable than it's been in the last 2 years to buy housing.
Yeah.
That doesn't mean housing crash.
No.
It does mean it's more difficult. You're basically farming. And I will tell you this, if supply kind of stayed on trend and went up, we might have price deterioration.
Yes.
But as we talked about earlier, I don't know what the number is. Let's call it 80% of loans have a 3 or a 2 on it.
Yeah.
We, unfortunately, for the next 3 to 5 years, will suffer what I call supply destruction. Other talking heads call interest rate trap. We are just not going to see the supply. And yes, I know all of you are talking about foreclosures and short sales. Sorry, not there either.
Not even close. Not
coming.
Even close.
Yes, you're talking about unemployment. Yeah, it could double. People still have equity. Here's the deal.
is 6%,
Mhm.
is 6% unemployment extremely
It's
reasonable?
yeah. I mean,
It's
when I was getting my degree, we assumed that 6% was full employment.
right. So we're still
That was like the magical number. If we could ever
right.
get to 6, we'd be fully employed. The Fed has done their job. Well, folks, we're at
Exactly.
3.6 and going lower Friday, I would guess.
And you have twice as many jobs available as were available.
Yeah.
And a number of those jobs are actually pretty good paying jobs.
Yeah.
And I still believe that the biggest barrier to entry to the housing market is people having a down payment.
Oh, it is.
So when the giveaway administration comes up with some money that they're going to gift people or make available to people, guess what that's going to continue to do to supply? And I think they're going to start to see some of the numbers. They're going to start to see that they're scary. But because Washington, regardless of who's in office, doesn't do a very good job at math, the problem, it's always math to serve a narrative. The problem is going to be is that they're going to create difficulty in the housing market by gifting and giving away down payments. That is the biggest barrier of entry. Because right now, I can, with what the latest price increases are in mortgages, my rent is less than a mortgage.
Exactly.
Right? My rent is less than a mortgage. But the bigger problem is that the person doesn't have $15,000 to put down on a house and closing costs.
Mm-hmm.
So they're going to be stuck renting. That's the way it goes. Now, if the administration gives them that, if there's some program that gives them that, then all of a sudden, guess what? They can now afford a house, but they're still on top of that going to have to afford more from a mortgage because they've just gotten over the initial barrier of the down payment.
Yeah.
Which does what to that market?
Yeah. More demand. It doesn't
more demand.
Supply.
Right. More demand, no creation of supply because they make it a first time home buyer, which means none of the people that own homes can actually do anything with it. Mm-hmm. And so all they're doing is they believe they're doing the righteous thing by doing this. And all it's going to do is hurt everybody else by helping out one segment of the market.
Yeah.
This is why free market works.
Yeah. So again, folks, we didn't really have a supply problem in 2021 and 2020 because we did 6.9 million transactions, yes, which means we had plenty of supply. It was a record. We did 6.5 in 2020. Again, not a supply problem. 2020 and 2021 were demand problems. And you can tell that because days on market crashed in nearly every market.
Yep.
In 2022, it is going to be a supply problem. We are not going to see 6.9 million transactions. I think it's something in the low 5s because the people that would normally sell because they're sitting on 100K in equity and they want to move up and they want to get bigger house, they're going to look at the new, like if your current payment's $1,300 and you want that extra bedroom because you have another kid and your payment goes to $2,300, you're like, screw it, buy some bunk beds.
Yeah. 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 They still make those. I know. I looked. I threatened my kids with them yesterday. You guys don't know how to share. I'm going to show you how to share.
That's right. Yeah. That is funny. So yeah, it's again, so I want to be very clear. Mortgage crash, mortgage crisis, collapse, bubble, whatever you want to call it. Yes. No?
Mortgage for rates and housing crash? No. Rates, yes.
Yeah.
Transactions, yes.
Yeah. I was trying to set you up, but you answered the question. No housing crash in prices. Dude, come on. You're really disappointing half the audience.
I'm disappointing myself.
Exactly.
Last time I checked, I'm a real estate investor and I can't buy stuff when it's overpriced.
Yeah, exactly.
And here's the thing. I believe that we're finally kind of hitting that point in the market where obviously the velocity of value increase has dramatically reduced, right? Exactly. We've kind of hit like the top of the wave. Now, there will eventually be reduction, real reduction, not this fake reduction like it's 20% over the last number that's sold. And then they reduce it 10% and everyone thinks that's a real number. Look at your spreadsheets, be watching and tracking what stuff is actually selling for. You're going to start to see some stuff sell under list price, but it's because it sat for a little bit. But that rollover takes a little bit of time. And so right now you have the most expensive rates that we've had in a long time, on top of the most expensive prices that we've had in a long time, which means that affordability and value are way down.
Yeah.
That's what you have to be watching for. So what a lot of the smart money, Mike and Matt, What we're doing with our money is we're literally just waiting. Inflation can eat at it for a while because there's either going to be a massive correction on rates because something is going to be done there, or there's going to be a correction on housing 10, 20% in the next 18 months that we can then take advantage of something there. Either way, there's going to be something to take advantage of.
Yeah. And and again, I don't necessarily see the bigger correction, but I do know this. I've been doing this long enough to know that if I take enough swings, I can find the one motivated seller. I don't need the market to fall 15%. I need one seller to take a 25% haircut because they want out for some reason. And I want to be their answer. So lots of fun, lots of exciting stuff coming.
We saw a motivated seller list their property last week. It was completely mispriced. And they had over 100 people at their open house.
So it was mispriced low?
Yes.
There you go.
Yep. It was
I want to find the one that's mispriced high, let it sit for 30 days, offer here, and then we'll negotiate up 10%.
So you remember, this used to be an old strategy.
Oh,
this is an old strategy where people would low price houses, not by like 2%, but by 10%.
Yeah.
And then they would drive a bunch of people through it. And then they would see crazy amounts of offers and a ton of high offers. And it was like, nope, still multiple offer situation. Then they finally 2-3 steps in, go best and final. Yeah. Somebody falls across the finish line, but pays 20% over ask.
Yeah.
That's a strategy that's coming back. So just be aware of that. Don't think that just because they post something crazy, that thing is actually going to close anywhere near that, because it's still largely a supply issue, or there's something greatly wrong with the asset.
Yeah. What I would tell people, again, I only can tell you what I'm doing. So for the last 2 years, I was hot and heavy on first day listings. Yes. The only chance I had was to be first.
Yep.
Today, I don't even bother. I want everything 30 days old. I'm not even looking at anything unless it's 30 days old, because I will not pay list price in the market that's coming. I've actually raised my yield expectations.
Yep.
So that's what I'm doing. I'm fishing for motivated sellers and old listings. I've changed my strategy because, again, the market's changed. I am looking for a specific seller, and I'm going to find as many as I can. Matt, where can people find you?
Lumberjack Landlord on YouTube and on Instagram, and 11:30 a.m. Eastern time on Sundays. After the daily financial news, you find me on Lumberjack Landlord on YouTube. Just having fun. We have a little real estate party every Sunday for a few hours.
There you go. Thanks, buddy.
Thanks, Mike.